Hi guys, welcome back to another video. So today I kind of want to go over my stock portfolio. I'm just going to go over some of the holdings that I have, kind of my investing strategy and some things that I look for when investing, and maybe give you some tips. Of course, this is not financial advice and this is for education purposes only. So please do not take my entertainment literal and get a financial advisor, because I am not one. So here is my Robinhood portfolio. As you can see right now, it stands at $3,058 as of Monday, May 24th. The market was down today. I lost about $45 or so. You know, whatever, it's fine. We don't really care too much about the daily trends. My goal is mostly long term. So just taking a look here, you can see my stock holdings here. I have 35 shares of Ford, and you can actually see over here is, I believe this is my total return. So all of my stocks are up except Shift Technologies. I actually bought more shares of these today because they took a major dip. I'll get to that later on since it's down the list here. But Ford, I mainly hold Ford because of their switch to electric vehicles. The F-150 Lightning, the Mustang Mach-E, they don't produce cars anymore. They try to focus on things that they can actually make money with. So I think Ford is long-term play. Yeah, so that's why I hold Ford. GE, they are very, very small in my portfolio. A lot of these I hold mainly for dividends. I'm trying to focus more on growth stocks because of my age. I am younger, so the dividends are more of a secure play. But you know, I have GE in here. They don't pay a major dividend, but they are a very established company. So AT&T, they have had some major flack in recent weeks, selling off, or I guess they're basically selling off their media, you know, HBO Max, and with Discovery Plus, putting it into one company. They're trying to clean their books up a little bit. So that was not. It has its pros and cons. The pro is they kind of get some debt off their books because they are like one of the most indebted company that is in the non-banking sector. So those guys, that was their main move. But also you're looking 20 months, I think, or so, 2 years after they bought Time Warner, they're selling it off. They were very upfront about how bad of a play it was. It was a bad deal that they made, and they lost investors a lot of money. So initially and you know, we can go into here into the chart. You'll see, I believe it was last Monday, they had a huge climb up from the news, and then they took a big dip. So you know, they got up to like $33, I think, and I guess some people say you should have sold, but I still believe in AT&T. I still might sell. I mean, they have a great dividend. I think they might cut their dividend, but I don't know. Right now I'm holding, and I'm going to see what happens. I'm not going to buy any more. I'm not going to sell any right now. I was up quite a bit, and now, not so much, 1.5% now. But this doesn't include dividends, and I've gotten a lot of dividends from them. But they are 34% of my portfolio, so I will not be buying any more AT&T as I start to add more funds to this. They will not be a major player here. So AG&C, mostly hold them for their dividends. They are a REIT. Yeah, they don't move much, but I mean, I am up almost 17% as a total return, not including dividends. So yeah, they're nothing too exciting. I have a Verizon because I'm a Verizon customer. I don't own as many shares as Verizon as I do with AT&T. I am trying to slow down in the telecom sector, so that's why I haven't been buying Verizon as much. But they are a leader in 5G, and they didn't try to focus on other acquisitions like AT&T did, and Sprint and T-Mobile. So they focus on innovation. So that's why they lead the market there. But competition is still really high. So Welltower, they are real estate company that focus on healthcare, long-term care facilities, things like that. So they're a local company here. I've done quite well with them with only having 2 shares. I think they are my highest return of 90%. Yeah, obviously, I wish I would have bought more, but going to the banking sector, I have Huntington Bank. I mainly hold them for their dividend, but they also they do very well in auto loans. So their consumer lending is very strong. I think they're a little more on the conservative side of lending. So their their rates of return aren't great, but it's stable. Again, it's really a dividend play, but just to get my hands wet in the banking sector, might pick up a few shares of Fifth Third, but yeah, I don't really try to do the big banks too much. Not at the size of my portfolio right now. 2 shares of ExxonMobil, mainly dividend as well, but I don't know when I bought them. They took a major dip because of COVID and the whole oil thing. So January this year, got in at $44.74, 33% return. So I mean, they took a dip. Oil was still crazy because gas prices are insane. Pitney Bowes, oh man. What do I say about these guys? They focus on commercial shipping, supplies, and equipment. They're a major leader in that. They make it convenient to put the post office, FedEx, and UPS all together with one account, one machine, and you can use labels and automatic printing machines. And it's pretty neat, and it just kind of simplifies things for businesses, both small and large. They're very diverse with that. So I actually have kind of swing traded them a little bit, which I don't like to do too much. I would buy and then I would sell, but not too much. I mean, they have some movement, but as you can see, a 10% return since earlier this month isn't terrible. So I think they're a long-term play, especially with more online shopping. People aren't using the mail as much as far as sending letters, but they are sending a lot of packages. So Shift Technologies, 11% of my portfolio. They focus on the used car sector. Their main competitors are like Vroom and Carvana. They're severely underpriced compared to their competition, but they also don't hold the highest market share. So if they can focus on attaining more customers and hopefully getting more vehicles in their inventory, I think this is why they are down so much today. I know they focus on used vehicles a lot, but usually when someone is selling a used vehicle, they usually buy another one. Well, if you can't buy a vehicle, there's a supply and demand issue here. So I think that's what they're facing. Along with inflation, they can't really offer the bottom of what they can for vehicles because nobody's selling them, so they have to pay a premium. It's the whole market right now is insane. Inflation, shut up, Buckeye. Inflation is crazy. So right now this covers what I have. I'm trying to cost average down. I think it was at like $8.30 maybe, and I got it down to $7.75, which is why I have like 52 shares. I think I'll continue buying. I'd hold 100 shares of them, but they're a growth play. They are a growth play. I mean, I was up quite significantly when they were at like $9. I think I was at like maybe $8.30, $8.10. I can't remember what my average was, but I was at like $1 share, so it was like $50. But from the size of my portfolio, that's a pretty decent return when you have $300 invested. That's pretty much that's my entire portfolio. It's not as diversified as I'd like it to be. I need to get into tech, a little more in healthcare. I need to diversify a little bit more, but I'm not doing too bad. This is my holding. I'm not advising you to purchase these. I'm just showing you guys what I have. I have a small portfolio. It's nothing crazy. I do hold a lot in cash. I do need to invest more of my money because overall, I mean, I don't know. I'm at 2%. This is, so COVID started here. You know, we had the whole COVID thing, and then we went up. This part is my learning experience, is what I like to call it. So, you know, I learned a lot of things here. You know, these were day trading. I stopped investing, and then I just left the money here. Day trading went bad, and then COVID happened, and then it's been up. You know, it's been up since then. Over the year, though, you know, 30%. It was 40 at one time, but the past month has been, well, I guess it hasn't been that, but it's been very crazy. The past week, I know it's been down. 3 months been up. So I don't know. We move around quite a bit here. I don't really have too many volatile stocks, but the market itself has been volatile. But yeah, if you guys have any recommendations for me to check out, I mean, I do have a clean energy list that I am hopefully I have to do some analysis on. And then I have some potential buys here that I already have in here. Either way, thank you guys for watching. Comment, like, subscribe, hit the notification bell. I'm trying to come up with some things to get out to you guys, so I appreciate everyone's support. And I will see you guys on the next one. Oh, and make sure that you comment down what you want to see next, or maybe some stocks I need to look into. Let me know. Let me know if you hate my content and that I should quit, or if you want to see more. I don't know. But make sure you guys like, comment, and subscribe. So I'll catch you on the next one. Bye.